All right, so in this video, I want to do two things. I want to sell a naked call with Questrade, and I want to do an earnings trade on Netease. So it's like a 2-in-1 because I'll be selling a naked call on Netease, and it has earnings tonight. So why am I going for a naked call? First of all, I can't predict direction after earnings. All I could say is that it has already gone up a lot. It does have a high of 484. So I'm thinking maybe after earnings, it'll retest those highs. But this is just an assumption. I really don't know what's going to happen. The maintenance required or the capital required to place a put would be too high for this trade. But what I could do is if I want to sell a naked call, so first of all, I'm going to make sure I'm under options, and then I'll look for Ntes, which is the ticker. And then I will click all so I could see all the strikes. I'm going to choose the nearest expiration, which is August 14. And just today alone, the stock went up 20 points. So usually if it goes up that much, there's a better chance that it doesn't continue that much higher. It has already moved up a lot. Doesn't mean that it doesn't go up higher, but I'm just saying it's more unlikely that it keeps going higher, or if it does, it won't go high by that much. So these are just assumptions I'm making. I could be wrong. So now I'm going to choose as far as I could go for a decent premium. So I could choose the 525 naked call for to collect about $1.05. So that's $105 if I do one contract. So that's about 50 points away from the current market price. So I lose if Netease moves more than 50 points after earnings. It already moved 20 points today. 50 points would represent about, percentage wise, 50 divided by 475 is about 10%. So now I'm going to look at different websites to see what it did in the past. So you can see in the past it was able to move almost 25% up. It has gone up 10%, maybe 1, 2, 3, 4 times in the past, but you could see the prices here was different than the price towards after 2012. So you can see after 2012, it hasn't gone up that much. It has never gone up after earnings more than 10%. Obviously, it doesn't mean that I wouldn't do it again, but I'm just looking at stats here, just looking at probabilities. What is the most likely scenario to happen? If I look at Option Slam website, I've got 4 minutes to go. I need to make a trade fast. So if I look at the past results after earnings on Option Slam, you can see that the past maybe 10 trades, the past earning results when it was trading in the high numbers, it dropped 5%, dropped 5%, went up 6%, dropped 1%, up 4%. So going up 10% is unlikely, not impossible, but unlikely. So here's a trade that I'm going to make. I'm going to do a naked call at 525. Simply, I'm going to click on it, and then the order entry updates automatically. I'm going to choose maybe like $1.15, and I'm going to sell a naked call. Click sell, click yes, confirm short order. So this is a naked trade. So the risk is unlimited. If Netease opens at 550, then I lose $25 times 100, so 2,500. So it's really unknown how much I could lose, but it's just I'm betting on statistics. It's unlikely that it moves up 50 points or 75 points after earnings. Already that it is a $475 stock. Already that it has already gone up 20 points just today. Capital required to place this trade is 6,500. It doesn't mean that that's the amount that I would lose. Like I said, the amount that I could lose is unknown. It really depends what it opens at. Okay, so sell to open one Netease August 14, 525 call at $1.15. Capital required is 6,000. Send order. Now I can go back to order and just see if it gets filled or not. You can see that my ask is right here. There's only one, and then the bid is 1. So if I want to get filled right away, I would change my price to bid or just bring it closer, maybe 110. But the last price accepted was $1.15, so I have a good chance of getting filled. I'll just hold on to it. And if we look at the put side, I don't think I would sell the put side, and let me explain why. If I look at all strikes, so if I try to get $1 at least, I would probably have to go to the 435 strike and look at the bid and spread. It's really far. Actually, this one here is not bad. I could probably do the 430, so it's about 45 points away. Let's just look at the capital requirement for this trade. So it's about 11,000, so too much capital required for this trade. If I go back to orders, it's not filled yet. Let's look at modify. So it's dropped to $1.10. $1.05 would get filled right away. I've got a minute to go. I've got 30 seconds to go. All right, didn't get filled. The order got canceled, as you could see, but I could have gotten $1.05 easily. So I missed out on the earnings trade, but we'll see what happens tomorrow. If it ended up being a winner or not, we can find out tomorrow right away. The other trade I wanted to make actually as a naked call was on Tesla. You could see that it jumped almost 200 points today. So I was thinking of selling a call as well. And if we look at all strikes, but when I was looking at it in the morning, I was going to sell at 1730 at a 1730 strike, and I was going to collect about $1. Right now that same call option is worth $4. I would have been in big trouble if that happened. But right now, I could go to 2000 strike or even the 1980 strike or 1970 and collect $1. As long as Tesla stays below 1970 by Friday, I keep that $100 premium. This one requires about 14,000 of capital to place the trade. So regardless, so this is how you would sell a naked call with Questrade. Now, my earnings trade with Netease didn't go through because I didn't get the fill I wanted. I didn't want to change it and bring it lower either. But regardless, if it did get filled, it would show in my positions here as a naked position. So Spotify is a naked call. So you can see I've got 2 contracts of a naked call, 310 on Spotify expiring this Friday, which I sold for 50 cents and I can close it for about 10 cents right now. So I would make a profit of 40 cents times 2 contracts. But this one I'm probably going to just let expire because of commissions. Questrade commissions, I would have $10 that would get taken away from my profits. And I only sold 2 contracts, so that's $100. And I don't think Spotify is reaching 310 by Friday. So I'll try to let it expire worthless. If anything, tomorrow we'll see what happens. But my plan is to let it expire worthless. But if I do want to close it, so if I did sell a naked call and I want to close it, I simply click on the position. It opens this. I click buy and sell. And then I pick the price that I want to pay to close it. And then I'm not going to sell, I'm going to buy because I want to close it. I already sold it to open. So I sold to open. I want to buy to close. I'm going to click buy. And then you could see that it says buy to closed. So that's how I know for sure that I'm closing the trade. And I'd be paying $20 to close the trade plus commission of $6.45. But I collected $100 to open the trade. So I'd make a difference of about $70 profit if I want to close the trade. But since it's only 2 days, I could hold on to expiration Friday and let it expire worthless. But obviously naked call is kind of risky because the risk is unlimited. And a stock can fly and then you would have to buy it back for who knows how much, and basically your loss is really unlimited. And these days stocks have been flying on a regular basis. I find naked put is safer because worst case scenario, you just end up owning the shares and you could always roll a put for a credit and just wait for the stock to come back up. And since the general direction of a stock is to go up, then you've got a good chance that your stock recovers and then your naked put becomes safe. But if you sell a naked call, yes, there's always a stock market crash, but sometimes a stock might never reach a certain price again. So imagine if you sold a naked call on Netflix, for example, at 200. It's never going to reach 200 again, or it's mostly unlikely. So you could be seeing really big losses with naked calls. So it's a little risky, but that's why I'm going really short term. It's just an earnings trade. So tomorrow I find out if it's a winner or not, if it's a loser, although very, very unlikely, but anything's possible. But if it's a loser, then it's a loser. But most of the time it's going to be a winner and it's going to be an easy $100 profit. But sadly, my trade didn't get filled. We'll see tomorrow if I regret it or not. Most of the time I end up regretting not getting filled. I could have gotten filled by just modifying it, but I don't know. I guess I wasn't too confident. Regardless, so this was how to sell a naked call with Questrade and how to close it as well. Yesterday, I did an Apple put spread and I quickly regretted it. So today I closed it. I got out of it. So yesterday I sold an Apple put spread. I did 2 contracts. I went for 30 days and I didn't like holding on for 30 days in this market because it looks like the market's about to drop anytime soon. So just in case, I don't think a 30-day put spread is safe in this environment. So I opened it yesterday for 85 cents, but I closed it today for 60 cents. So that's really the beauty of time decay and selling options. I mean, in just one day, Apple moved a little bit, not that much, and I was able to get out for a profit. But after commissions, it's not that much, probably $25 net profit. But still, I'm happy that I was able to get out of the trade that I changed my mind on for a profit. So I did have a put spread on TWLO that I did for earnings. It went against me. So today I sold an iron condor at 265. So now I started off with the 242.5 put, and then I added the 265, 270 call spread for extra credit and to reduce max loss. And as you can see right now, it's trading for about, TWLO is trading for 241. So it broke my 242.5 short put, and it looks like I'm going to have to bring the call spread closer. Maybe I'll bring it to 242.5 to really reduce max loss. It expires not this Friday, but next Friday. So I've got that 1, 2, 3 put initially were put spreads, but they got tested. So I turned these 2 into iron butterflies. This one is still an iron condor. I might turn it into an iron butterfly depending on where TWLO moves. It still has a chance to go up, right? So that's why I didn't sell a call spread exactly at 242.5, just to give it a chance in case TWLO comes back up above 242.5 and the trade becomes a winner. But if it continues to drop, if it drops below my long strike of the put spread, so 237.5, if it drops below it, then I'm going to bring my call spread as close as possible and then just really hope by August 21st it really closes somewhere near 242.5. So my next earnings trade that I plan on making is Baidu tomorrow. It has earnings, I think it's supposed to have earnings. Yeah, so it has earnings tomorrow after hours. So what I plan on doing with Baidu is selling a call as well. So only reason is because I think it tends to follow what Google does. So Google dropped after earnings this time. So I think it's also going to drop after earnings. It tends to follow it a little bit. So if I go for the call, naked call as well on Baidu for this week. So this one has the next day expiration. So it's perfect. I love those. So I don't have to worry about time value. It really just expires the next day after earnings. So let's see how far I can go on the call side to collect at least $1. So I can go all the way to maybe around 137. So it's about 11 points. So it's about 11 points away. And I could probably collect about $1 or even 136, which is 10 points away. But that's right now. I'm sure tomorrow the prices will be different, but just to get an idea. So I could go about 10 points away for $1. Or I can go even further. Let's say I go to 145, which is almost 20 points away, and maybe do several contracts at this strike. Let's see what the capital required is for this strike. So capital requirement is 3,300. So maybe I could do 3 contracts and collect maybe $90. But I think I'd rather come closer and just do 1 contract. And let's see what the capital requirement is at the 137 strike. So it's about $5,000 capital requirement. The expected move on Baidu is exactly $10 or exactly $10. So yeah, maybe 135 isn't so safe because the expected move is 135, that it reaches 135 or 136, sorry. So maybe it's best to go a little bit further. Or let's look at the put side. On the put side, I can go to 117, which is also 10 points away. So it seems like right now it doesn't look too good because it's not that far from the current market price. At least with Netease, the expected move, if we go back to Netease, you could see that the expected move on Netease was basically, I'm just adding up the at the money option. So it's about call and put. So it's about 30 points, let's say. That's the expected move. So I was selling the 525, which is 50 points away. So it's more than the expected move away. All right, so if you have any questions, leave them in the comment section below. And like always, if you can open an account with Questrade to trade on the stock market, use my referral link below to get $50 in free trades. If you enjoyed this video, click the like button, share it with a friend, and subscribe to the channel. Thanks for watching.